stock market morning prep video for Thursday, August 8th. We did not get that bounce that we were trying to look for here. We are oversold. We have washouts in lots of our indicators, and yet headline risk takes precedence. And we continue to get some really bad news and geopolitical tensions escalating. Dow Jones down 75, Nasdaq down 20, S&P down 10, almost 11 points, and Russell down almost 6 points. So right about 0.5 tenths of 1% across the board. It wasn't really anything. It was pretty quiet. The markets were really quiet yesterday. I could see the bulls attempting to try to bid the market up, but there was just too much selling coming in and really putting pressure on equities. A selective few stocks were moving lower, but we had the builders, what I mentioned yesterday, started out really nice, and then they just kind of rolled over. Las Vegas Sands and Wynn, I would mention about watch the casinos. They're getting some real poor numbers coming out of Macau. They had gotten upgraded by Craig Hallam, but it really didn't do anything much to help, and they started to roll over too. So, looking for a rally to sell into, but it looks like the headline risk really is taking hold of this market, and we're just kind of get stuck in this range right now. I would love to see a move higher into that 1940-ish. But right now we're trading much lower in the pre-market session yet again. So I want to go through some of these indicators. You can see that you got to be very careful here. If you are short, tighten your stops. If you're swing trading short, we are getting washout readings in a lot of our reliable indicators. As you can see here, stocks above the 50-day moving average are usually in this zone area where we bounced on. That did not happen as of yet. But you can't rule out a possible short covering rally because we are oversold in the very near term. Let's take a look at the advanced decliners. As you can see, we're kind of getting into that washout territory as well. When you get these little moves lower, we usually get a bounce here, as you can see. So this you can just relate to that. So watch out for a possible rally here. Now, remember, news trumps the charts, and that's really what's happening right now. So I wouldn't go out and just go and buy the market looking for a bounce. Let's get some confirmation. Let's get some real good volume, reading highs in the ticks above 7, 8, even 1,000. Get some buy programs coming. Right now we haven't had that, so let's be very careful here. We have volatility expanding. You can see here in the VIX. We are inside that Bollinger Band, so that is really giving us a buy signal for the markets, for equities. But we have this volatility expanding, and look at the ATR. So we're kind of moving up here, and once we get into this higher area, this 18, 19-ish area, that's going to be a decent sign that we might get a little bit of a bounce. So just be careful. If you are short, tighten your stops. If you are looking to get short, I would not look to get short down here at these levels. And you know, it's like anything else we mentioned. Risk happens very fast, and that's why we try to kind of position ourselves accordingly during the day. I am personally not looking to hold any swing trades. Swing trading is just not working out. You know, markets just they have no memory. They're up one day, down 2 days, up one day, down a day. So you're really not getting anywhere by swing trading unless obviously you're having a couple of stocks that are working out for you. So I'm looking just to pick up some day trades, and then when you get a couple of trades ready to get set up, and then all of a sudden something else happens that it kind of ruins the setup. So I'm hopefully we get a little bit of a bounce here, and this is exactly what I'm hoping for is a 1940ish. I'll take even 1930 in the ES, but with bonds creeping up this way, you know what my second target is, 140.22, and that's looks like it's right there. It's coming right into play. We've had these upside targets pretty much all summer. We identified that inverted head and shoulders pattern. I believe was right about here. As you can see, here's the head, right shoulder here, left shoulder, and we took the high to the low, and that measured perfectly of a 1618 extension of 140.22. And again, I'd be buyers of dips in bonds, and I would continue to do so. And I mentioned this many times in my video that the bonds are in a short squeeze, and it's going to continue to move higher. Now, would you buy bonds here? No, of course not. I'm looking for a pullback. Never got it. Never got the pullback, something like this we were looking for. So you can see bonds are just continuing to move higher. Money keeps going into bonds, and the shorts continue to get squeezed in here. So I wouldn't be surprised if we see this target hit by Monday, 140.22. So nice technical analysis in the bonds. And again, I wouldn't chase it though. I would love to buy bonds. Even for a hedge, put on a hedge here because I think the markets get nasty. And this is not the sell-off that I'm looking for. I'm looking for a deeper downside correction here in the markets. Now you can see here we're down, 1, 2, 3, 4. Counting that one day up and then 2 days, 2 hard days down last week. So we are oversold. I'm looking for at least a bounce back to this lower trend line or right up in this area here, 1930. I'll show that to you in the hourly chart. And here's what I'm looking for. I'll even take that 1930, that's that 200 period coming in on an hourly. We get some sort of a violent move up. Everybody gets long again, and then sure enough, they dump them, and then we get to that target. The downside target I'm looking at is going to be about 1860 to 1870, and then we would reevaluate it. Okay, but that's really the ticket, is right up in here. This little Fibonacci cluster, I'm looking to get short here. Okay, and then get everybody long, and then get a real big washout, and then I think the markets are healthy to start accumulating, and that's what we need. We really need this, but the government refuses to let this market purge itself or at least correct, and then that's when happens. Now you have you only needed one excuse: geopolitical tensions happening and escalating, and then sure enough, everybody wants to take profits. And look what happens here. Just not more than 2 weeks ago, we made new highs, and we just basically took out 3 months of gains in a matter of 2 weeks, and that's what happens. And this shouldn't happen. This should not be like this. If you had free markets that would just literally just correct when it needs to, you wouldn't have these type of nasty moves. Anyway, and this isn't even nasty. I'll be honest with you. We had 2 big gap down days and a couple of days here in the Dow Jones. So I do think that you're going to see some further downside. 1272 extension is going to be our first target right here, and then our second target come in at 157.99 in the diamonds, which is the Dow Jones ETF. First target met, as I mentioned here. Now we're looking for the lower trend line area, and then of course the 200, and that's going to be my targets here. Pretty much across the board, the target would be the 200-day moving average in most of these indices. Now the Russell has now met and exceeded its target, and we have another bear flag forming here. So this bear flag breakdown would be the next target would be the 107.42. Ugly looking chart, one of our leaders, and it is ugly. And the transports is holding up pretty well, the chart I just showed you. But you have to be very careful here because we're not getting a bounce. And remember, news does trump the charts, and they do take precedent. So we have to be very, very careful here that we could get a big washout at any given moment. I'd like to see the markets bounce here a little bit and get short. I think shorts are okay to start swing trading, but we need a bounce. You can't get short down here. I'm hoping that we get that bounce sometime, maybe this morning, today, tomorrow, maybe into Monday, and then sell off again next week. We will have some weakness going into September. As I mentioned many times at the end of July, I just thought that it just looked like that things were different. It felt like things were different here. And sure enough, it's starting to play out now. Here's the 50 on the Qs. Now, tech has been holding up pretty well. Believe it or not, a lot of stocks have been holding up well. And that's a great thing. But when you see Europe really starting to break down and they're in correction territory, you got to say, well, you know what? United States is going to follow. We have a worldwide market, guys. So I don't think that we would just be out of the woods while everybody else is correcting and we're not going to correct. So you have to be careful here. And this is a 50. And the first target I'm going to be looking for will be right around this area here. And then, of course, the 200 is way down here. Maybe not that far, but maybe we get into the supply area here around 88, 85. Well, that would coincide nicely with that 200. So let's see what happens the next couple of days. Be careful getting short at these levels. I'd like to see a nice big rally and maybe for a couple of days, and then re-enter the market short, take that down and see where that goes, and then we will reevaluate it again. Okay. Hope it helps, guys. But so far so good on our analysis. I like to see the builders are starting to catch a bid here, so be careful. Yesterday they rallied for the first half hour and then they sold off with the market, but Lumber prices are starting to increase. I like that. Casinos, I'm looking for a short on any bounces. And then we'll look for energy. Be careful with the energy sector. I do like the energy. They had a nice washout, and let's see if we can catch a bit in that in sectors like the energy sector, SLB, EOG, Baker Hughes, Halliburton. Those look really, really good, right for a nice big bounce. All right, guys, have a great day. We'll speak to you tomorrow. Take care.